In the next 48 hours, markets could decide between opportunity or real downside risk. Recent headlines are shifting the narrative fast, and positioning now could matter more than ever. In today's video, we'll break down the war impact, while why oil might be currently range bound unless geopolitics kicks in, and whether assets like Bitcoin have a path higher. Hello, everyone, and welcome back to Strategic Markets, where we try to give you a technical and fundamental view over all markets. And today, in our end of week session, we're immediately starting off with Trump's ultimatum. Within 48 hours from this exact point in time, the United States of America is basically saying to Iran, if you do not open up the Strait of Hormuz for ships to pass through with oil, they're going to be considering obliterating their various power plants, starting with the biggest one first, relatively their oil aspects. And what does that mean for the markets? Well, particularly speaking, stocks are going to tumble hard if after Trump delivering this 48-hour ultimatum to Iran, because everyone's going to start fearing in risk. And if he actually destroys the relevance of the Strait of Hormuz, I mean, what discussions currently happening is with Karg Island. If Karg Island or so is currently in discussion, that would actually mean a massive destruction and aspect for logistics for Iran to operate on. So, what is that currently looking like for oil? Well, oil has been recently setting a little bit of higher high on the daily chart at least. But what has me really worried is that on the relative strength indicator, the RSI, we had a higher high in all the way in the start of March, but now as we're coming towards the near end of March, the RSI is actually going lower. So the relative strength is lowered a little bit over here. And that is called an RSI divergence, where the price is moving upwards, but the RSI is going downwards, which generally leads to a bit of a lower price action from my analysis. Now, Steve might actually comment on this a little bit, and we'll wait for. I would love to show you where we're at with that particular aspect. But some other key aspects. This just came in 1 hour ago. Iran representative to international maritime. Ships except enemies can pass through Hormuz Strait with coordination for security and safety arrangements. So they're saying they want to actually work through this. Now, why do we nothing is certain unless we really see it for itself. But in the past, Iran has said, this was earlier in the week, that Iran wants to negotiate, but through Trump's claim, it's not ready yet. So, with that being said, we just kind of have to wait it out and see whether this particular aspect actually follows through. If it actually opens up the Strait of Hormuz, that's where I believe that oil could go lower. And where in the past have we seen instances like this where oil can go lower or RSI divergence has occurred? Well, gold was a great example. Gold, we can see over here from the weekly, we were consistently setting higher highs from 13th of October till the 2nd of March. But on the RSI, we kept losing strength from October all the way to Feb. And now in March, we have just dropped massively. We've had this little bit of a RSI divergence play out, and we've gone lower. Similar with silver. Silver, the price kept moving higher. The RSI over a short period from December onwards to Jan kept trending downwards. What happened? We had a price drop over here as well, which gives me a little bit of thesis that maybe oil's run is coming to lose a little bit of steam. We're just going to have to see how that plays out and what geopolitics has to do with that. But on the other side, we have the risk assets. We have your stocks. We have particularly Bitcoin. What has Bitcoin been doing? Well, right now, everyone's really scared. Bitcoin's currently has had a bearish flag. It's broken down in the past, gone 33% down, and now we're possibly setting up another bearish flag. Now, in the past, I've talked about this particular move, and I've said that on the weekly, to me, this looks like a rounding bottom. But if we do have a breakdown, because from a daily perspective, this is technically a bearish flag. Even though the weekly might have a rounding bottom, on the daily, this is a bearish flag. So if we actually do break through the 67K level and actually confirm a daily candle or so, not a wick, but a confirmation of a daily candle or so, and even if you don't bounce to 63, and if it's a fake out or so, then in that case, I'm genuinely concerned for the downside. But until then, until especially in the weekly as well, unless we stay above the 66K zone, and don't have a relative fake out for, let's say, 1 to 2 weeks, if you're range bound in this area, whatever. But if we actually have a confirmed breakdown and we're going below 62K, literally all bets are off on a weekly perspective. And that's where I'd be like, yep, cool. We are possibly heading to the bear markets. But one thing that gives me hope is this particular monthly chart. We've discussed this before. In terms of monthly support, we are holding on to strength over here. So 62K on the monthly support for this month of March is where I draw that last line, where if we break through below that and we confirm a candle close, that's where I'm open to bear markets. I don't know where the bottom goes through here, but right now we are very, really decent strength in terms of the trend aspect, and I'm willing to hold out hope to see if we have any positive upside there. Another aspect that we've been tracking is Ethereum and Ethereum strength, particularly to Bitcoin. I was talking about Steve about this earlier, but basically ETH strength right now, we have lost the 2100 level, which kind of is annoying. But ETH strength to Bitcoin, we're still printing a green candle on the weekly. We wicked out a little bit. We were getting a bit too optimistic, but in that particular case, right now we're still holding a bit green. We just have to see how this plays out. But another interesting aspect, if oil starts to go down and risk starts to go up, is currently, look, Iran does charge about $2 million to pass through this Strait of Hormuz. This came in sometime about 1 hour ago as well. And basically, this new governing regime says war has cost. So they do have a price on that particular transportation, and they're wanting to push that through. So a lot of things are in the air, but if oil does start to pass through 20% of the world's supply, it might actually be beneficial, and that might actually have an impact on oil price going down and risk assets having their move. But right now, it has not been confirmed. And on the other side, with Bitcoin, as much as we'd like to be hopeful, currently up to 66K, I would say just above 65, 66K, we still have a lot of liquidation, which means people having stop losses on their trades or their accounts being stopped out as well from being able to trade in these particular positions. And if that were to happen, then in that case, we still have a bit of downside to go. So don't be surprised if we are having a little bit of negative market action over the next 12 to 24 hours while this ultimatum is taking place. But if a war does go ahead and Iran does get bombed, we have some negative aspects, then we've got a little bit to worry about there. On that, I'll pass it over to you, Steve, for your thoughts, please.
Okay. Well, thank you very much for that, Yash. As always, wonderful analysis. And your thoughts in terms of the RSI divergence are absolutely brilliant and fantastic in terms of the technical analysis in that way as well, too. We'll take a look at Bitcoin a little bit later on, and we'll have a look at the big major catalyst right now in relation to Brent crude. Now, as you were alluding to before, you're feeling as though the Brent crude overall could be heading a little bit more towards the downside now in terms of potentially losing some relative strength and losing strength overall. In a way, I feel as though I can understand exactly where you're coming from, and especially in terms of a bit of a distance away from short-term moving averages, as you can see from here. Let me enlarge this so you can actually see where I'm talking about from there. So there is a bit of a distance, as you can see. It seems to be moving its way around, but it is still tracking along quite nicely with the short-term moving averages, as you can see there. Now, the reason why I'm feeling as though, okay, there still could be a little bit more room to move here, we have had a test of this upper 4 hour short support resistance line that we were talking about in the last few videos. It had a test of that only on Thursday. Had a test, came back down in terms of back towards the short-term moving averages, but it hasn't come back all the way down to the previous 4 hour support resistance line. So it hasn't been entirely weakened all the way back towards this area here. So there does seem to be some fair amount of strength that's still going on along those lines. The implied volatility in all of the options hasn't weakened considerably. So overall, what I'm basically seeing throughout the options market is a fair amount of activity still going along. If you take a look outwards in terms of the options volatility itself there as well, in terms of the open interest in all of the options that are going on over the next few months, the largest amount in terms of the open interest over the next few months in terms of, say, the April and the May contracts has a reasonable amount of open interest in terms of the 120 strike price for the USO contracts themselves. That generally means that whereabouts it actually gravitates towards. So a lot of the options market makers generally tend to expect that the price of USO, which is currently around about $121 per barrel at this point in time, they're generally expecting that the price is going to remain about stable for the next couple of months around about that area.
Mm.
Interestingly, in June, the highest open interest for those call options at this point in time is actually 130. So we're actually looking at more than likely an appreciation of around about 7% extra compared to where it is right now from 121. So we could actually see more of an appreciation of where Brent crude would be as well, where it is right now, of about probably around about the same magnitude, potentially about another 7% on top of where it is currently right now. That would bring it up to probably around about where this support resistance line is there, maybe even a little bit higher. If it gets much higher than this could be our new support area there, and then we can see where it potentially hovers there. Personally, I'm not expecting it to really breach much, much higher than there unless all of a sudden more and more contracts at a higher strike price are purchased over the next 2 to 3 months. So keep an eye on those as well in terms of what those open interest areas are in terms of the options to see where the option market makers are actually pricing in those options as well. Can give you a bit of a clue as to where those areas can gravitate towards. But at this point, we could probably be bouncing between these areas here for quite
Mm.
some time. See whether or not we get a breakdown or a breakout from this range. So some very interesting stuff going on there. The one chart I'd really like you to take a look at is the VIX. So this is the volatility area. Look at what's actually happening here again. It seems like we're creeping upwards again. So it looks as though this war could be extending outwards for quite some time at this point in time, as more and more people tend to be buying more and more protection at this point in time, worried about what the direction of stocks is at this stage overall. The dollar overall as well seems to be just stabilizing around about this breakout area, which is where it actually broke out of, and it hasn't really broken down, hasn't really broken out. It's just really stabilizing around that breakout area overall.
Mm.
The most important chart that I'm really, really fascinated with is the TLT. This is the bonds, the long-term bonds. We were talking about this last time, and really, very, very fascinatingly, we've literally broken through this major support area over here. This happened right on Friday in terms of that big last red candle that you see right over there. Essentially, we've broken down to levels when we take a look at things. We're actually now breaching towards levels not seen since September of last year. What this corresponds to more than anything else is a rise in yields that we have not seen for quite some time as well. What that basically means is more than likely an increase in interest rates overall in terms of borrowing power, which has an effect on stocks. And overall, in terms of stocks, this is where things get really, really interesting because essentially what that basically means is all of the stock indexes themselves have actually now breached the 200-day moving average at the end of last week, except one. And the one in particular that didn't break was the Russell, which is now actually testing the 200-day moving average at the end of the week. So that makes things extremely interesting. And you can see the SPY itself really broke that 200-day moving average, and so did the Qs. And remember, we were talking only just recently as well that the Qs were actually starting to show a little bit of strength around about up here, but didn't actually manage to actually get through that VWAP,
Mm.
right? So we were starting to think, getting a little bit more hopeful in terms of tech, and that's a big thing as well in terms of tech because what does tech relate to most importantly to? It relates
Bro.
closely to crypto,
Yes.
right? So we'll talk about crypto right now as well, because what's been going on with this, my friend? We had a test of the VWAP here in terms of Bitcoin as well, right?
Mm.
Unfortunately, it didn't manage to get past it in terms of Bitcoin. Didn't get
No.
past that VWAP in terms of that green line there. Sorry, you about to say?
No, I agree.
Okay. It didn't manage to get past it, and now it also hasn't managed to get past the short-term moving averages either. So it got past it for a short period of time, and now it's failing to get past it. On top of that as well, it's also failed to get past all of these support resistance lines we were talking about only last week and in terms of the midweek presentation as well.
Mhm.
So it's really, really failing to get past any of those. And on top of that as well, the 69,300 support resistance line from May 2024 has just been failing as well over the last couple of days. So now we're really stuck beneath a lot of those, which is really, really struggling. And as you alluded to as well, the Ethereum magic line of 2100 as well has just been breached as well too, to the downside.
Mhm.
So we're really starting to struggle there. One solace that's coming through is the 50-day moving average that hasn't been breached as yet in terms of Ethereum. Another interesting chart is the banks. Okay, we've been saying recently that the banks have actually been struggling quite a lot. This is an interesting one overall there too. The banks are still struggling. Yet, even whilst the banks have still been struggling, crypto is struggling as well now as well. That
Mhm.
was the opposite before. So it looks as though everyone's really just basically throwing everything out with the baby in the bathwater now as well, because the same situation's going on in relation to gold and silver now too. We were basically mentioning with silver beforehand. Well, we'll start with silver actually. Silver overall was failing to get past the VWAP as well in terms of actually failing a test of the VWAP and then falling apart. And we were saying that silver was dragging gold down. Well, unfortunately, gold is now failing as well. Both
Mm.
gold and silver are now falling beneath the 100-day moving average, which is really not a good sign.
Agreed.
So overall, we're really, really starting to struggle in terms of all major assets at this point in time. Okay, so what does this all mean for all of our investors? It doesn't matter in terms of long-term investors, short-term investors, medium, aggressive, conservative, whatever the case might be. Well, overall, as you can see, a lot of levels have basically been breached one way or the other in terms of, say, your long-term averages, your short-term averages, they're all being respected to the downside, all of those kind of aspects that are going on. Now, you might be looking at this and saying, Steve, I'm a fundamental analyst. I believe long-term that all of these companies are going to turn around. Maybe these things are all oversold on an RSI. We could have a massive bounce back. Everything could all happen along those lines there. Sure, it could happen in that way. Now, if that's the case, wait for the signal. See what happens in terms of a certain level that may actually be breached to the upside. And if that's the case, then by all means, follow it through in terms of those particular levels that actually prove that there's something going on. So obviously, buyer beware, be very, very careful, have a look at things. If you are interested and you say to yourself, I really, really want to be in something, don't overcommit. Basically say to yourself, okay, this is the amount I'm prepared to lose if it goes wrong. That would be the best suggestion that anyone could ever give you. Take a look at things and be honest with yourself as well and say to yourself, okay, look, this is the most I'd be prepared to lose if that was the circumstance. And then say to yourself, okay, hey, that's perfectly okay. And I'm prepared and I'm happy to do that. And then move on and then say to yourself, stick to my plan. But that would be pretty much about the best that anyone can ever say of anything. With that, mate, I will hand it back to you.
We have possibly 48 hours to get confirmation of where this war goes if Trump holds to his views. But until then, like Stephen said, make sure to hold your positions close and don't go too much into something you can't commit to. Thanks for joining into our session today, everyone. We really appreciate the likes that you give us. It really keeps us going. And if you have any suggestions or comments, please feel free to put them in the chat. And if you are really enjoying these discussions, we'd love it if you can subscribe. But other than that, we wish you a best and we'll see you for the next one.